6 consecutive weeks of lower volumes and softer volatility in Bitcoin. Let's start with the disturbing holiday news. Bitcoin's liquidity may fall before Easter, and this is not a good news for bulls. Over the past few days, the volume of short positions through ETFs has jumped by 22% to 9,012 Bitcoins, and such volumes have been recorded only twice in history. Vetle Lunde, head of research at K33, noted that this is similar to the typical bottom-forming stages when the market is full of bearish positions. Financing rates have remained at the red for 32 consecutive days, and if this continues for 2 more weeks, then this period will break the record of November-December of 2022. But of course, there is a caveat. Before Easter, traditional markets are closed and trading volumes and volatility are decreasing, and this always affected crypto. Since 2019, Easter weeks have shown turnover and volatility below the annual average every single time. Bitcoin is currently trading at around $68,600, and the gap between the spot and realized price has narrowed from 120% to 21%. And before reaching the accumulation zone where the bottom has historically formed, the asset needs to fall by about 20% more. So perhaps this Easter will bring not only the Easter bunny, but also another drawdown. Hello everyone, and you're on Alice Daily Crypto, channel with a daily analysis of crypto news, and in a second we will move on to the most interesting events of yesterday. But before that, I want to remind you that your likes really help the channel grow, and subscribing will help you not miss the next video. Solana-based DeFi project Drift hit by $285 million exploit. So Solana's Drift protocol project survived a $280 million hacker attack. And this is not a joke on April Fool's Day, although it was a good day, you know. The attacker had been preparing for several days. He created wallets with deferred transactions, used social engineering to bribe 2 of the 5 signatories of the security console, and on April 1st activated malicious transactions immediately after the legitimate test withdrawal of funds. As a result, wrapped Bitcoin, stablecoins, and Jito have been stolen, and my personal favorite here, Fartcoin. And the native Drift coin has collapsed by 37%, and its capitalization doubled that. And of course, the community is already burying the project, and Bybit was able to get a $1 billion loan after the hack because they had the revenue and Drift doesn't have it. Plus, a scandal broke out with Circle. The company did not freeze the USDC, although the hacker transferred hundreds of millions of dollars from Solana to Ethereum during US business hours. ZaxBT is indignant now. Circle was asleep while millions were following away, and this is after they mistakenly blocked 16 legal wallets last week. In general, DeFi remains the wild west, and for some reason, centralized stablecoins are just not in a hurry to save when it's necessary. Probably they're just waiting for Easter miracle now. Oil whale $70 million short, a $1.5 million loss versus $139.25 liquidation. So President Trump gave a speech to the nation. He promised an extremely strong blow to Iran, what an asshole, and Brent crude jumped from $101 to $108, which is plus 7.5% in 24 hours. As a result, Hyperliquid liquidated positions worth of $46.6 million, of which one whale lost $17.18 million. Its liquidation price was $101.49. The Brent oil USDC contract is now the 4th largest in terms of trading volumes on stock exchange. $789 million, open interest of $529 million. In March, high demand for commodity derivatives provided Hyperliquids with a record volume of $5.4 billion. Another trader who is already known for his losses in December of 2025. He lost $37 million in the first month of activity. He formed a position for $80 million. first on Bitcoin short $40 million, liquidation price $79,805, S&P 500 short for $2 million, and Brent oil long for $37 million. He clearly bet against the optimistic scenario, but his story shows that he often makes mistakes. For example, in February, he earned $25 million on shorts, but then he lost $40 million by flipping too long. Currently, Bitcoin is trading at about $66,400 and minus 3% every single day, and also altcoins have sunk even more. As Caroline Maroon, co-founder of Orbit Market, says, markets are racing depending on Trump's latest comments. RWA segment activity surges by 80% in just 1 month. The volume of tokenized stocks transfers in March amounted to $2.87 billion, which is a new historical maximum, an increase of 80% in just a month. The total volume of RWA securities reached $942 million, and that is plus 2.65%, and the number of holders exceeded 200,000. Most of the assets are concentrated at the Onda project. Xstocks is in the second place, securities in third, and the most popular tokenized shares are Circle Internet Group, Exodus Movement, and Tesla Xstocks. The total value of all RWAs reached $27.5 billion, of which 56% or 15.4 billion were issued on Ethereum. US Treasury bonds in the forms of RWAs are approaching $13 billion. Institutions are increasingly integrating with TradFi, and in March, NYCE partnered with securities to operate a new type of stock around the clock, and the SEC allowed Nasdaq to trade digital assets jointly with Kraken, launching in 2027. In general, while Bitcoin is falling and oil is jumping, real assets on the blockchain continue to just grow. Apparently, investors have decided that tokenized bonds and stocks are safer than meme coins and short positions with 7x leverage. And you know what? Maybe they are right. Anthropic took down thousands of GitHub repos trying to yank its leaked source code, a move the company says was an accident. So Anthropic staged an epic fail with DMCA. An AI startup accidentally deleted thousands of repositories on GitHub, trying to hide the leaked cloud code. The company confirmed the leak of part of the code of its developer tool on March 31st, stating that it was an error in the release packaging caused by a human factor. But the most interesting thing started even later. Anthropic sent GitHub a request to delete repositories under copyright law, and about 8,100 archives, including forks of the official repository, were just purged. So users who had nothing to do with the leak were left empty-handed and outraged. Boris Cherny, head of the Cloud Code department, admitted the mistake, and the company withdrew most of the requirements, and of course GitHub restored access. But the bitter taste remained as always, Against the background of the incident, enthusiasts launched the OpenCloud open source project based on the leaked code. Basically, Anthropic wanted to protect its secrets, but actually just helped create a competitive open source project. Moral of the story is, if you can't control the leak, at least don't delete innocent forks. Or just basically don't make the mistake of human factor. But that's all the news for today, and I will see you tomorrow. Bye!